Data are okay. I saw the NFIB survey yesterday, painted a reasonably positive picture. Small businesses in the United States are actually seeing a fairly bright outcome at the moment. It feels like the totality of the data, and I keep kind of using Powell's phrase, looks all right at the moment. Should that guide us to what we're going to hear from Powell Friday?
I think it should. I mean, I think Powell has been very clear, throughout his tenure, that he is going to be led by the data. He is data dependent. And every time he kind of gets put on the spot about, when is easing going to come, he refers back to the data and looking at inflation metrics, looking at the job market. I think the nuance that we might get a bit more of is which data, because there's obviously a very large suite of data that comes out from the US every month. And at the last meeting, he was very clear in guiding people to thinking about the jobs market and the labour market as something that they're really starting to watch a lot more closely now that it seems that inflation in the US is under control. So I think that's going to be where a lot of traders are kind of watching for exactly what sort of strength of language, warmth of language around the labour market in particular is going to be, because that's where we've seen kind of a few wobbles. Like the print sort of end of July was obviously very weak, and that is obviously what prompted this whole big sell-off and recalibration of how quickly the Fed was going to have to cut. Obviously, the data we've had in the last couple of weeks has been far more positive. It's painted a much rosier image of growth. So I think there's going to be an interesting question about how he sort of leads people through that balance between thinking about the jobs market, thinking about whether that is starting to tail off versus this quite, as you say, healthy-looking growth picture that we're seeing kind of elsewhere.
So what is the case for a cut then? Is it just normalization?
I think that's a part of it, yeah. I think, there is that sort of sense that you need to kind of buy yourself some room in case inflation kind of picks up to be able to hike again. And there are, sort of certain signs of some weakness, lying below the surface. Obviously, some of that jobs data that we were just talking about is there. And I think there's just a little bit of a sense of kind of, the time has come where we're in that sort of right kind of balanced part of interest rates. Maybe they're a little too high at the moment. There's no expectation that the Fed is going to cut to zero again, for example. I think we're seeing kind of 3%, 3.5% as being sort of roughly where they end up. But yeah, I sense that now is the time to just sort of ease off a little bit.
Does the dollar bounce in this kind of an environment? The dollar's taken a hit for a while now. It's been tracking lower. I wonder whether better data could turn that around. FX is having a really big effect at the moment. It's been an absolute snooze fest for ages. And suddenly with the yen and what's happening with the dollar, it's actually kind of feeding through into asset prices in a big way.
Yeah, no, it really is. And I think, obviously dollar-yen, a hugely important pair that we're watching at the moment. I think on the dollar side, we have been seeing a bit of weakness in recent kind of weeks. I think that sort of reflects that sense that we are moving towards cuts, even if not super aggressive cuts. So we are going to be seeing kind of theoretically an environment that weakens the dollar. But you have all these other cross currents, right? Dollar is never just dollar. It is dollar versus the yen, dollar versus the euro. So a lot of this is going to depend on that picture of divergence or convergence of monetary policy. Yeah. And we'll get a lot better sense of that at Jackson Hole. It's not just Powell who's going to be talking. We'll see Bailey, we'll see Lane, maybe even some of the guys from the Bank of Japan. So we'll see.